Welcome everybody to Stock Talk with Nico Kritikos. Today we're going to be going through 10 stocks I think are good buys right now in the month of March 2022. The past couple months, most stocks in the stock market have been falling and some of them are down over 60 or 70%. So I'm not a financial advisor. This is just what I believe to be extremely good deals out there based off of my analysis. So if we get started here, we can see the first one on the list is Carnival Cruise Line. This is the world's largest operator of cruise ships. And recently they just started releasing more ships out of, I believe, Jacksonville. And those ships have not been sailing in over 2 years now. So cruise ships are starting to get, back to normal capacity and things are opening back up. However, the stock is down over 35% on the year. And so this is another one I picked up about 200 shares in, and I believe this to be very undervalued at $17 a share. Now, the big reason that most of these stocks are down is because of inflation fears, the Russian and Ukraine war, and then what is the Fed going to do with interest rates? So there's multiple things going on affecting all these stocks. Some of them have other worries around them, which I'll bring up, but this is just like a temporary short-term thing that's going to last for a couple of months. And then, a year from now, 2 years from now, all these stocks will most likely be much, much higher. Most of them will be at least a 2x or 3x from where they are today. So, yeah, there's some short-term hurdles to get over, but these are all great companies, great brands that have huge futures ahead of them. So next up, we have Wynn Resorts. And with this list that I've compiled here, I've tried to give a nice variety of different types of companies, different types of business models. I didn't want to do just one industry. So I did, I tried to blend them. Wynn Resorts is a luxury resort company. They operate in Las Vegas. They used to operate in Boston, but a couple of weeks ago, they sold their Boston property. And I think they're opening one up in Saudi Arabia now, but they also have properties in Macau, China. And that was actually a big reason why this stock is down so much, is because Macau had, their zero COVID policy. They had really strict travel restrictions. And so, of course, that was going to hurt the gaming industry in that area. And Macau, China is actually a bigger source of revenue than Las Vegas. So I think it's the biggest casino gaming industry, city in the entire world. So Wynn Resorts is a great company, though, great brand, and they're probably the most luxurious resort company you could stay at when you go down the Las Vegas Strip. So this is another one I love. I bought a little bit too heavy into this one. 50 shares at $92 a share. That's a little bit too high. I kind of wish I would have went into this one slower, but still, I think it's going to be over $100 stock. So that one's another good one. Then we have CRM. This is a company I owned last year. I don't own it anymore, but Salesforce, of course, they are, a huge Goliath in their industry. And a couple of years ago, they bought out Slack for, I believe, $26 billion, one of the largest acquisitions. And so this company is a CRM software company, customer relationship management, and they're pretty much the best at what they do. So this is another one that they have a pretty strong moat for going for them. And this stock last year was over $300, and today it's $200. So I think this is a good spot to be picking up shares of that one. And then there's a couple on this list that the stocks that I don't own, and that's the main reason for that is really because I kind of ran out of money, because as the market was going down, I invested so heavily into my other ones. So that's really the main reason. The next one on the list is Adobe. This is probably the most important company for creators out there, like people who make YouTube videos, people who edit, people who do Photoshop, anything like that. They use, a bunch of Adobe products, and Adobe has recurring revenue from their subscription models. So, things like Adobe Premiere are so important to creators that it gives them a big competitive advantage for this company. But last year, this company was $688, and today it is $450. So it's been down over 30%. And I think this is another great brand with a strong moat to them. Then we have Meta. This is one that I do own. 25 shares at an average cost of $200 a share. And this is one that topped out at about what, 382 last year. So Meta they own Facebook, they own Instagram, they own WhatsApp, they own Messenger, they own Oculus. So they're, and this was back in last year, this was one of the biggest companies in the world. And then now they just wiped out over $250 billion worth of their company in the last couple of months. But, this is a company that it's not easily replicated to have over 2 billion people using your platforms. And, they're working on innovative things with the metaverse, but then they also are making so much ad revenue from Facebook and Instagram. So this is another one that I feel safe in. Then we have Square, but they changed the name to Block. I have 31 shares at an average cost of 143, and now the stock is 112, so I'm down on this one as well. But this stock topped out at 280 last year, so it's down quite a bit from its highs. And Block owns, I believe, the number one most used finance app on the App Store, which is Cash App. So they have Cash App, they have their, they make multiple different products and services for small businesses to use to just do, daily transactions and stuff. And then they're also working a lot with Bitcoin, right? They're working a lot with crypto things and different ways to send crypto to people. So this is another one that has a very strong business model and years and years of growth ahead of them. And keep in mind, it is ran by Jack Dorsey, who is the founder of not only Block, but also Twitter. And last year he quit being the CEO of Twitter so that he can focus on this company. So that's also a pretty good sign there. Next up, we have Lululemon. And this is one I do not own. Lululemon, I've never owned this stock before, but this one topped out last year at 478. Today it's 300. So it's come down a lot from its highs. And I believe one reason for that was because they bought out a company called Mirror. I'm sure you've seen commercials for the athletic mirrors where people do workouts in their homes with the mirrors. I think they bought that company for $500 million. And I think their growth estimates going forward were actually reduced. And I think that hurt the company, but that doesn't change the fact that the brand for this company is so strong. And this is seen as a high-end luxury company. So that also gives them a competitive advantage. This is not something that where anyone can just walk in and, take their customers or replicate what they're doing. So that's also another thing. I believe the growth vectors for this company are primarily going to be international markets like Asia. And I think it's also going to be online shopping for men, because in the past years, it's really been, most of their business is focused on women's products, but as they're transitioning to more of men's products, I think that's going to open up a lot more business for them and bring in a lot more money for them. So Lululemon is another one I like. Then we have Arbor Realty Trust. This is a real estate company. This is I own more shares in another portfolio, but I have 125 shares at $18 in this account. Main reason I own this is because they pay a 6% dividend. Right now, it's probably over a 6% dividend, but this company trades at a very low valuation. I believe the PE was like a 7 or an 8, very low. And they have a strong balance sheet. And if you go on their 10K, you can look at where they're buying properties at. I know they have properties in New York, Florida, Texas, I believe Arkansas, and those are some of the strongest markets for real estate. So I really like Arbor Realty Trust. They have a strong dividend. They can consistently have grown revenue and net income over the last couple of years, and the valuation is very low in this company. We've also seen over the past 5 years, this stock it has not had that much weakness. Of course, it fell during the pandemic, but other than that, it keeps going up. The one thing I don't like about this company is over the last couple months, 6 months or so, I've seen a lot of fundraising, kind of where they issue more shares, they dilute shareholders, so that will push the stock price down. But I think that that could be a positive sign if they are using that money to invest in more properties. And as long as the management team is good and trustworthy, then I do trust them to invest that money wisely and, get a good return on investment. So Arbor Realty Trust I've owned this one for a little bit under a year now. And so this is one I really like. I would buy more if it fell, let's say it fell a lot to like $15 or $13, then I would buy more shares because the dividend yield would be over 7%. And they have a super healthy payout ratio, super healthy price to sales. I believe the valuation is only like $2 billion on this company. So this is another one I really like. Then we have SAM, otherwise known as Boston Beer Company. I made a video on this one recently. This company owns Sam Adams Beer. They do Oktoberfest. They also own Truly Hard Seltzer. They own Twisted Tea. They own Angry Orchard. They own Dogfish Head and lots of famous brands. And this stock went up a lot 2 years ago or a year ago because of the huge demand for hard seltzer, right? There was White Claw and then there was Truly's. And that's why the stock shot up. However, what happened was they overestimated the growth that was going to happen, and they had to throw out a bunch of Trulies and lose a bunch of money. So they're currently dealing with that. I believe EPS was only $1 for the past year, but over the next 12 for this upcoming year, it's expected to be $14. And that EPS and profit margin is going to skyrocket because they're not going to have to deal with those losses anymore. So Boston Beer is another great one, low valuation, and it's also a nicely growing company. I also like the innovation this company does. In Canada this year, they're coming out with a cannabis infused drink. So that's going to be interesting, as well as I've already heard positive feedback from their partnership with Pepsi. They came out with a hard alcoholic Mountain Dew a couple weeks ago, and it's only rolled out in 3 states so far, but the reviews look pretty good. So I think it's going to be a hit this year, and that's going to be another growth vector for this company. If we look back to 3 years ago, we can see this stock traded at over $400 3 years ago. So, and right now it's $366. So this is another one I own. I just own the shares in another account. And then finally, the last one I have is Shopify. I own 4 shares at an average cost of $900, and this stock has fallen so much. It topped out last November at $1,700. Now it's $600. So it's come down a lot. Shopify is I believe the second largest in the country for e-commerce sales. I think Amazon has 40% market share, and Shopify has, I want to say, somewhere around 15%. So Shopify is a very fast growing company. Traditionally, the valuation is very high on this one because they are a fast growing company, doing at least 35% growth. And so it kind of deserves that valuation, but the valuation's come down so much now. I think this is a super good deal here. I mean, Shopify allows people all over the world to run their own store and make money. And Shopify is also partnering with crypto companies to sell NFTs. They're partnering with TikTok to increase sales. So I think Shopify is going to be a really strong company for the next at least 5 to 7 years. And so this is what I'm also very confident in. If we look at the past couple of years of this company, we can see it has not been at these prices since the pandemic times of early 2020. So this is a super interesting one. And yeah, those are my 10 stocks. Those are my 10 stocks that I'm most confident in with the most conviction. So let me know what you think down below, and I will see you guys in the next